Kelly Lee McFrederick with Beach Natives Real Estate Group with Remax Metro, downtown St. Pete, and I brought you to the outside of my office. I get tired of sitting inside. I came outside. I wanted to talk to you for a minute. This is something really fun. I think you're going to want to pay attention on this one. Hey, how about 9 documents that will help you on your real estate tax breaks? As we're coming up into that wonderful April 15th, let's talk about some tax breaks you can have if you bought a house here recently. Number 1 is, IRS Form 1098 on your mortgage interest statement, okay? Guess what? You need to get that one ready. You can deduct some of that. Okay, so that's 1. Number 2, your property tax statement. That says you can't do your waste and sewer, all that stuff bundled up into there, but some of those property taxes, you are able to do some deductions off of there. And everything we say, you want to go through your tax person, but have those documents ready and say, okay, tax man, tell me what I can take off. Okay, your HUD. When you finish a closing, those legal pieces of paper with all these lines and it says plus, minus, that's your HUD 1. Take that to your tax account. Some of those deductions, some of those fees you paid for closing are tax deductible. See, we save you money and you don't even know it. Okay, we have another one. Moving expenses receipts. Okay, be most careful though, because with this one, you've got to cover the IRS rules, which is, do you live this far away from your new home? Did you move to a new job? Why did you have to? What caused you to have to move? And if it fits those boundaries, guess what? You could maybe have thousands of dollars in moving bills. I know that's what Mayflower costs, right? Or some of the other ones, all of them. Anyway, some of those can be deductible. And while you're moving into that new home, think about this. If you work a lot in your own home, be careful though, you can deduct some of those utility bills. Meaning if you work out of your home 50% of the time, 70% of the time, some of those exact percentages can be deducted. So make sure you have an average utility bill and how many times you actually spend in your home of doing your actual work, right? Okay, if you had a short sale, you may have a 1099 that would actually say, hey, we have a relief of the debt. Oh my golly, have those. Actually, you get penalized if you don't have those in hand when you go send in your taxes. So make sure that you have that. That is very, very important. Okay, now we have for utilities, we also have income and expense statements for rental properties. Make sure you have what it cost you and what you made, because you actually have an ROI in there, what you actually really made, so you can deduct those other expenses out. So keep a good balance sheet on those. If you haven't, I'm sure you know that, because most folks that are doing that have made home ownership where you can actually make a profit with it. Okay. And if you are energy green, I love green. Yes, I think I'm wearing green. You can deduct some of those statements too. So if you have certain fees, there's a green smart bus going by right now. It has smart bus on the side, energy efficient. If you made your house green, you can actually deduct a lot of those expenses, which makes off of your taxes. But the neat thing is green makes your house more valuable. So it's like a double whammy. Wow, I'm green. I just saved money. Green is money, right? Okay. Now you also have a mortgage credit certificate. That's going to be a little bit trickier there, but see, you can use those that would be your 9th kind of tax benefit that you could have coming up into April 15th. So be sure to look into that. Ask your accountant these questions. So remember those 9 items to save money, the 9s, on April 15th. Thank you.